Geopolitics dominate the headlines, but the Fed takes center stage this week. Markets have started the week digesting Friday's meeting between President Trump and Russia's Putin. It's now the time of Ukraine President Zelensky to meet with Trump, amid fears he could try to pressure Kyiv into accepting a settlement favourable to Moscow. The week ends with a pivotal speech from Fed Chair Powell at the annual Jackson Hole Symposium, potentially disrupting traders' summer plans. Vicky Pryce is Chief Economic Advisor to the CEBR. So Vicky, let's start with the latest developments between the US and Russia. Is this the beginning of the end for war in Ukraine, and what would that mean for markets?
I don't think the markets are necessarily betting that that would be the end, but they're looking at this as a way forward, possibly. What we saw, which is really rather interesting, is that by Friday and then over the weekend, stock markets actually, were slightly up. So when you look at Asian markets in particular and what we see this morning, they had been picking up a little bit, thinking that perhaps, we're getting into some greater period of certainty ahead, maybe. But I think most of the emphasis has been on what's going to happen to interest rates. So I think they have been a little bit more important than perhaps what's going on for international markets in between Ukraine and Russia right now, and what the Alaska meeting resulted in. Not very much, as we know, but the focus seems to have been there and not so much on the meeting that happened on Friday.
Let's talk about the Fed now, Vicky, and hotter than expected PPI raised some hawkish eyebrows last week. Are hopes of a jumbo cut in September now dead?
Not necessarily. In fact, if anything, if again you look at what the market's been doing over the weekend, traders, I think, have moved up their expectations of a cut in September. And that is interesting because, of course, on the one hand, as you rightly say, we have seen the increase in wholesale prices, which was considerably faster than had been anticipated. So we saw an increase of 0.9% between June and July, which is way above expectations. We've also seen since input prices, that you exclude tariffs from that, also going up, in fact, much more than people had expected, because they anticipated that maybe exporters were going to keep the prices low, given that there would be tariffs coming on, but that doesn't seem to have happened. So they seem to be pricing it all through as they would otherwise have done. So that again suggests that there is something in the pipeline that might lead to higher prices in the future because of all those tariffs added to it. So nevertheless, the expectation seems to be that the Fed is going to look at what the slowdown in the economy already says about the future course of possibly inflation. And despite the fact that we may have a temporary, maybe transient type inflation boost, they fear more about the economy, in fact, working the other way around. So the expectation is still that there will be a cut in September.
Well, Fed minutes are due on Wednesday. How deep and destructive is the dissent among the Fed?
It is a bit of a worry, but it's not just, of course, with the Fed that we've seen that type of dissent happening. We've seen it in other countries. We saw that, of course, also in the UK, where inflation expectations are quite high for the short term, and where interest rate expectations now have switched the other way because there was huge dissent and they had to have a second vote. So yes, we do need to worry, but of course there is also the political pressure that may be coming from the president. One Fed governor going, another one coming in, and who knows how exactly the balance will be. But it is a concern about whether the independence will be preserved. But the likelihood, nevertheless, is that the sort of overall sentiment will be one of cuts. And what will happen later, whether the cuts will accelerate because of that, remains to be seen. But we have already indeed had a number of governors coming out and saying we needed sharper cuts in the US.
Well, Powell has been resolute in fighting against that political pressure. Could Powell use his Jackson Hole speech to push back on hopes for a September cut?
Well, he could. But as I said, he may, in fact, do the opposite in a way, because I think it's all becoming a little bit unhealthy in terms of the complaints, if you like, and attacks by President Trump. So in some ways, sort of easing that tension might not be a bad idea. And frankly, a small cut in interest rates isn't going to harm the US economy particularly, especially if the increase in inflation that we're expecting to see may only be a temporary one, adjusting to the tariffs, and particularly, of course, if the economy indeed continues to show a slowdown. Against that, I have to say quickly that we've also assumed that the consumer wasn't going to go out and spend in the US, but they seem to be actually doing so. So there may indeed be some rethink. But overall, I would suggest that there will be a softer talk from Joe Powell.
That was Vicky Pryce of the CEBR. Don't forget, you can watch more videos on Reuters.com.